Raise your hand if you ever needed to wear braces in your life. I know I had to, and actually, now that I think about it, I can't see any of you actually raising your hand, so if you want to virtually raise your hand by hitting the like button, that'd be super cool of you. Anyway, if you did wear braces, I'm sure you remember that was a point in your life that was not the best of times. They were painful, you couldn't eat everything that you wanted to, things would always get stuck in your teeth, and they would break pretty frequently. The company we're looking at today does have a solution to many of those pain points, and that company is Smile Direct Club. Hey everyone, thanks for joining me today. My name is Matt, and as I mentioned in the intro, today we're going to be taking a look at Smile Direct Club. Before we do that, I just need to say, not advice, don't take it as advice. Please go speak to a financial advisor. If you do need advice, they'll make recommendations for you. This is just for your entertainment purposes only. Now, just to give a little background about Smile Direct Club, in case you're not familiar, they started in 2014, and they are a clear aligner or an alternative to braces. So it's just like a clear mouth guard looking thing that you could put in, and it helps straighten out your teeth. They are taking part in this new virtual doctor world by giving you the ability to receive their molding kits, and for you just to do it yourself at home, you send it back and then they send you your custom 3D printed aligner. And if you don't feel comfortable doing that, they do have a small number of locations that you can actually go into and have a professional handle that for you. This does catch a lot of attention though, because it does eliminate the need for you to pay for a visit to go see your doctor or orthodontist, which is actually a point that I'm going to hit more on later. So again, with my efforts of just trying to be more efficient with these videos, we're just going to jump right into the numbers. Before we do that, I just want to say sorry if my lighting is a little off for this video. It's dark outside. I do use a lot of like the natural light to light these videos, and my little cheap lights that I got from Amazon are not really working that well with me, so I apologize in advance if the lighting isn't the greatest or if it means the quality looks a little pixelated because it's not as bright. Now, as we've seen, it's kind of a reoccurring theme with these past few numbers that we've taken a look at. These numbers aren't the best, but I do have, as I like to say, a pure play comparison, and that company is Align. They're both in the same business of making these clear aligners for your teeth, again, an alternative to the braces, and actually they, at one point in time, were partners together, but business got in the way of that, and now they are two completely separate companies. As we can see, Align has a much larger market cap, though, than Smile Direct Club. 37.58 billion compared to 4.82 billion, but Align's been around for a lot longer. I think Align started in 1999, so clearly has been on the market and had almost a 15-year head start over Smile Direct Club. Now, even though they had a 15-year head start, though, did not give them the head start on actually having positive revenue growth. As we could see, both of these companies have negative year-over-year revenue growth. Smile Direct Club, obviously a little bit worse at negative 3.71% compared to Align's negative 0.17%. So that was a little bit scary of a number for me to see, is the negative revenue growth year-over-year. But I guess I'm just going to take into consideration that people were probably not spending a bunch of money on these aligners or retainers, whatever you want to call them, while we're in the current situation that we're in. But as we could see, for revenue growth front wheel drive, we could see Smile Direct Club is a lot better looking in the future than Align, with that 26.61% compared to Align's 18.14%. Regardless though, those are both good numbers to see, and as I say in the past, it's kind of common, or it's not weird or strange to see a younger company have a higher expected revenue growth, because again, they're still growing themselves as a business. But both of these actually have very positive forward-looking revenue growth, and I'm aware FWD is forward, not front wheel drive. Again, to my surprise though, we keep seeming to find these younger companies with fairly healthy balance sheets, which is a good thing for me to see. As we could see, Smile Direct Club actually has a quick ratio of 2.85, which I was happy to see, because I guess I would have thought this would have been a pretty capital intensive business to get started, but I'm assuming that since they are basically virtual with the exception of their few stores they have, that probably eliminates a lot of expensive overhead that they would have needed to pay had they gone through a storefront setup. Align though, also with the 1.16, which I guess makes sense also for them to have a pretty good or decent quick ratio, because theirs are sold mostly directly through orthodontists and dentists, and so neither one of them are really like something you'd see in the mall. I guess you will see a few of them, but it's not going to be as often as you see like an Annie Ann's pretzel. But what I actually really liked about Smile Direct is their price to sales. So the price to sales ratio is very low. It's at 2.20 compared to Align's, which is 16.4. And let me check my notes here. Yeah, the average price to sales ratio in the medical supplies industry is around 7.16. So if we're looking at just that statistic, since Smile Direct is not profitable, we can make the argument that Smile Direct is trading at very much a discount right now, and Align might be a little bit overpriced or overvalued. So I was excited to see that, if we look into the future, obviously with Align being a little bit more established of a company, maybe that's what we can start to expect for Smile Direct looking forward, seeing that there is room to grow. And we hope they don't become totally overvalued, but if we get into it when it's undervalued, nothing wrong with seeing those price to sales increase as the shareholder. Now, let's just go ahead though and move on to what I do like about this company. And the first is that it's a cost-effective solution. As we all know, traditional braces are very expensive. Now, if you're outside of the US, these numbers might come as a little surprise, but in the US, braces cost around $6,000 to $10,000 for your treatment, sometimes exceeding $10,000 to have your teeth line up. Invisalign costs around $3,000 to $6,000, I believe, for their solution, and Smile Direct Club is less than $2,000 for their product. Now, $2,000 is still very expensive, don't get me wrong, but when you compare that to traditional braces, even to Invisalign, it is a much more cost-effective solution. And not to mention, it eliminates the need to go see either a dentist or an orthodontist, which somebody like myself can appreciate because, as you all know, I'm self-employed now, so I don't get health insurance coverage or dental insurance coverage, and any unneeded trip to the dentist can be very expensive for me. So I like the fact that they did eliminate that aspect of it, again, which does create a little bit more value in this product for me. And I do think this product has the potential to be a long-term solution or even an alternative to, even if it's just retainers. Now, I did listen to their earnings call. We kind of ran through those numbers. There's nothing great that stood out to me, but a few points that management talked on that I thought was impressive or what got me encouraged to see this as an investor. And of course, they have a customer-first mindset, which I said last week and probably won't be the last time I say this. I think that is absolutely crucial for new businesses to have that customer first mindset, because the moment your bad publicity outweighs your good publicity, that will absolutely hurt the performance of you as a company. So building that customer awareness as well as loyalty right from the beginning is something that I like seeing, and having that focus just shows that, at least to me, they're focusing on the right areas. Speaking of that focus in the right areas, they mentioned long-term, whether growth in revenue, growth in products, growth in customers, 30 times during their earnings call. So they're a very forward-looking company, thinking about their future and seeing what they can do to be the most effective company in the future or to their fullest potential. Again, something I like to see, because it's very easy to get caught up in the current times, especially when you're doing well as a company. So to still focus on the future and realize that you're going to have hurdles, but you're also going to have opportunities, is something that I like to see for this company. And lastly, one of the things, or how this really got on my radar, is they did announce their new partnership with Metlife. Now, I think that brings them more than 20 million customers. Metlife is one of the largest dental insurance providers in the US. And that is, now 20 million people that can have access to this with coverage. So, cost-effective solution to the side, if you have coverage, this could be a really cheap thing for you to have. And also, they have coverage with many other insurers as well. So they made this product very easily accessible to the consumer, which again, I like, because not all the time are high ticket or sometimes not even necessary items that easy to get into. So I like seeing that. Now, I do have to be honest for a minute. When I initially started my research on this, I saw the price to sales, I saw the share price itself. I thought this was going to be a stock I was going to load up on, maybe get like 500 shares of. But then I saw that when this stock IPO'd, it IPO'd for well over $20 a share, and it's now trading at less than half of that. And that was a little bit of a concern to me. Now, maybe the investment bankers see something that the common investors are not seeing, but that just had me a little hesitant. And when I looked at the analyst price targets, if you look at Simply Wall Street's valuation, it's also undervalued. But that's also the price estimate analysts give on a high end, so around $16 a share. Last I saw before I started filming this, it was a little bit over $12 a share, only giving us about $4 worth of room to run, which is good, especially if you buy a large portion of it. but I was just a little bit hesitant on going all in. And I actually almost even last minute just said, I'm not doing this stock this week because I feel like I need to do more research. That said, I did have a thought here, and I've been noticing a trend recently. If you look at companies like Teladoc, GoodRx, American Well, which is probably the one I know the least about, and now Smile Direct Club, these all have a common theme, and that's they are doing something drastically different than what we've seen for the past previous years, decades, in the medical industry. And they're just taking on a new approach to it. And some of these have a focus on being a cost-effective solution. As we all know, medical expenses are very expensive. And, GoodRx is there to help people find cheaper alternatives to prescription costs, whether that be finding a generic brand or something like that. And actually almost pivoted and did GoodRx this week, so that might be an upcoming video. Teladoc, giving people the ability to speak with a doctor remotely, which can also decrease the cost that doctors have to pay for those visits, which in turn can be passed along to the consumer, making doctor's appointments a little bit cheaper. American Well, I don't really know much about them, but I did see they have like kiosks, or again, just make it easier for you to get access to a doctor quickly. And I think we're starting to see a very overdue change in the medical space, and it's one that I'm kind of excited about. But this is really unique to me, and I like the direction that I'm seeing this head in. And I know that there's going to be more companies that come out with these alternatives or maybe more cost-effective solutions to traditional medicine practices. And that is something that I do want to be a part of. So I am going to add this to the portfolio, but I'm not going to buy as much as I originally anticipated. Part of that, yes, we can already make the argument that this is an undervalued stock. I should feel really comfortable putting the money into it and buying a lot of it. But I'll be honest. I know that as much as I say this is not advice, and it never will be advice, I wouldn't be surprised if at least one or two of you out there have made investment decisions based on the videos that I've provided. And kind of being cognizant of that, I feel like it's my responsibility to treat this as I would if it was my own money or if I was handling your money for you. Yeah, this is all fake money. I don't actually have $5 million in the bank. I wish I did. But I don't think just because I have this fake money and a lot of it is an excuse for me to go all in. And I would rather just pass along to all of you the approach that I would actually take if this was my real money. And I might buy this with my real money, but I'm going to get a small exposure for, as I said, there's something I'm not 100% on with this company and something maybe I need to look more into. And also, I don't want to pass along bad information to all of you, especially if, again, you do take this for advice, even though you should not, because this is not advice. And, I just feel like it's my responsibility to be a little bit responsible with this position. So I am going to add it to the portfolio, but it's not going to be as much as I originally anticipated. So let me go ahead and kind of run some numbers in my head here, and I'll be right back once we've added it. All right, so I did go ahead and add 100 shares to this. I know I said I wasn't going to buy a whole lot, and I actually did literally buy a whole lot. But my original intentions were to buy around 500 to 700 shares of this, because if you look at the market value that I have, we got about $1,100 worth of exposure to this, where if you look at DR Horton, we have almost $7,500 worth of exposure. ARC, we have over $5,000. So it's just something to bear in mind that because I bought a large quantity, doesn't mean I got a large amount of exposure to it when you put it relative to the rest of the portfolio. So to me, this is still a small position in this stock. And it's a sizable position to make it meaningful, but it's not something that I'm going to lose sleep over. It's not something I'm going to be worried about. So, for this one, I am going to be a little bit cautiously optimistic for. And if it continues to go up, that's great. We'll add more shares later, but at least we have a little bit of exposure in case that $4 runway actually comes to fruition. So that's kind of my thought process there, and I'd love to hear your thought process about this stock as well. Again, too, I just like this space. I'm not huge in the medical industry, but I love the fact that we have disruptors in there now, and that could actually be something that maybe does catch my interest, or maybe something I'll look more into for the future. Looking at some of the other stocks we have, though, Switchback. Oh my goodness, that was crazy. Yesterday, it was up over $3,000, making this, in this portfolio, not the E-Trade one, the biggest gainer, which was crazy because for a while, that one was down a significant portion. As we can see, though, ARC is up around $545. Etsy, finally profitable for Etsy. That only took just like 6 weeks. Not really, but that took forever for Etsy to finally make us some money, and glad we held on to that position. And that's why I like the long-term mindset, because you just wait it out long enough, and for the most part, you make your money back. Pinterest up $171, and DR Horton up $224. So I know the market's been kind of rallying recently, so I mean, I'm taking that in mind as well while we see all these positive gains. But I think the future is looking bright for this portfolio. Same thing with the E-Trade, but maybe next week I'll show you the E-Trade portfolio so we can stay up to date with that one as well. And there's our portfolio. So things are looking good here. Now, this video is a little bit longer than I expected, so I apologize about that. But again, would love to hear all of your thoughts. We broke 400 subscribers, and I think we're at like 406. So I am super excited about that. And thank you so much to all of you that did subscribe to my channel. If you've been here for a while, that was just super cool to see. And I literally did it that day. What was that, Monday? Yeah, like Monday, we broke the 400, I think, or I woke up the next morning to the 400. So thank you again to all of you who did subscribe. And if you're considering subscribing, I mean, hey, feel free to do so. Apparently 406 other people also subscribe. So join the party with us. That said, also, I just want to say next week I'm starting a real estate class. I actually have a very exciting opportunity coming my way, and one that I need to take advantage of. Unfortunately, that does mean that my videos will start to slow down a little bit, but I'm going to do my best to stay as up to date as possible. But you might not see me as often next week, and it's just because I'll be in a class all week. So let me know the stocks you want me to see, or you want me to take a look at. Also, if you guys like the short videos, I can easily do those. Making a 20-minute video is going to be kind of hard next week, but let me know what you guys want to see. And again, too, I'm not going to forget about you, but like I said, I have a huge opportunity at hand, and one that I just need to put all of my efforts towards, because it's been kind of a rough year of being self-employed. And so getting off that, with tomorrow being Thanksgiving, happy Thanksgiving to everyone that's celebrating that tomorrow. And if you're not, well, hope you enjoy the rest of your week. But I'm going to wrap up here because now I'm just kind of rambling on. So thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world and you're right here with me, and I really appreciate that. But I'll let you go ahead and enjoy the rest of your day. Again, happy Thanksgiving to all of you, and I'll see you next time.